Traders, welcome back to my channel. Today in this video, we are going to see the multi-bagger stock GPPL, and we are going to see the bar by bar replay in weekly time frame. So we are going to see the price action around Camarilla pivots, and these pivot levels are also calculated in the weekly time frame. So before we begin, please take a look at the disclaimer. This video is only for the education and training purposes. And now let's get started. So this is the price action of the stock in the next year from the IPO. So we can see that there was a breakout failure in R4. At the R4 level, the breakout has failed, and there was a first attempt failure. Then there is a second attempt also failed. Typically, R4 breakdown failure will lead to a price action where the stock falls to the S3 or the S4 levels in the coming years. And right now, the stock is falling down, and it is going towards the S4 levels. Now, S4 level has been hit in the same year, and now the stock has traveled into the next year. We have got the new R4 and S4 levels of the Camarilla pivot. Now the stock is consolidating around the pivot levels. So typically the stocks go nowhere. They just consolidate for most of the time. And right now we are seeing that there is some spike trending towards the S3 levels. And right now the stock is consolidating in at the pivot level. And there is some another volume spike we can see just now. And the stock might hit the S3 levels again. So let me go and pause this video, shift to the day time frame. You see the what happened exactly in May. So there is this is now the Camarilla pivots with the in the daily time frame. So we can see that there was a S5 level reached in May, and in one single day the stock gained 20% or more from the low. This is what the price action looks like in the day time frame. Now let's revert back to the weekly time frame and let's start the bar by bar replay. Again, the stock is consolidating below the pivot levels, and now there is another volume spike. Actually, the previous volume spike only, the green color one, and now the stock has entered into the next year. So now the next year's S3 levels have been taken out. So there is a comeback candle. The price again entered into the S3 and pivot zone. So this I'm calling it as a reverting candle or a breakout candle from the S3 levels because the S3 breakdown was rejected. So S4 was not breached, and that is S3 to S4 should have happened, but it didn't happen. And then this is why it is called as a breakout candle as per me from the S3 levels. So most likely the stock or the price action will be like the consolidation between the high of this breakout candle and the pivot. So let us draw a rectangle uh, for this consolidation area. So we are choosing the pivot as the high, and the low point will be the breakout candle's high level. So this is the our estimation for the potential consolidation, and let's see what exactly evolves now. Now there is consolidation at the lower end of the bracket, that is the rectangle. Now the stock is just consolidating between the S3 and the lower end of the bracket. It is attempting to move inside the bracket. Okay, so once it moves inside, it moves to the high sharply. So from the lower end of the rectangle, that is the lower end of the bracket, has moved to the higher end of the rectangle, that is the higher end of the consolidation zone, the estimated consolidation zone. That is, it has reached to the pivot. So now I'm drawing a downtrend line. This is all the hindsight advantage that we are getting, and we are drawing a downtrend line. So this particular downtrend line has been broken, and then the breakout happened from the lower end of the consolidation to the higher end of the consolidation. So that is how the trend got created, or we can say the mean reverting uh, setup happened. Now there is a consolidation again above the potential consolidation area, that is the pivot range. The stock is consolidating around the R3 levels, and then again it has broken out from that level, and it is now again consolidating, and then again it reaches the R3 level in the next year. So you can see that in just 1 week, it has traveled to the R3 levels of the next year. When the stock breaks out from a sharp range or a very small range, then it will just go very sharply to the destined value area. So if we say that the Camarilla pivots are the estimators, then that's where the candle might stop for a moment. So now it stopped at R3, then it consolidated in just one candle, and then it moved again to the R4 levels. It crossed R4 levels, and it is consolidating. But this is not a consolidation on the sideways basis. It is consolidating in a trend. So now it is in a weekly upward trend. So it has crossed R5 levels also in this particular year. And we can see that there is a consolidation happening above the R5 levels in this year. So this is how a trend would look like. Like it will move from R3 to R4, then R4 to R5, and then R5 and above. So it is now in a very unbounded momentum. So, but it is still consolidating. That is, the market participants are accepting this consolidation as the value area, or the maybe the intrinsic value of that particular asset has reached in that um area. Consolidation above R5, and now there is a breakout. So there is a breakout again that the bulls have taken it out, and the stock is moving to the R3 levels of the next year. So generally, R5 breakout in the following year and then hitting the R3 is most likely the end of the momentum trend story for most of the assets, because most of the assets cannot compound at that fast rate. The earnings have to compound before we get a huge move or a compounding trend. So generally, R3 failure has happened, and so now the R3 failure would lead to a downtrend in the upcoming years. That is what the typical scenario would be. But for very extraordinary assets, the trend keeps on going up and up till the compounding engine or the earnings that are being produced by that particular asset reach that those levels. Right now, we are just seeing a sideway movement, and there is a failed R3 breakout, and the stock would go down generally from here. I mean, because it is a just a general category stock, not so it has hit pivot levels, and now the pivot has been taken out, attempted to take out pivot. It's consolidating around pivot, and the stock is clearly in a downtrend right now. It might hit S3 levels in this year. Now let's pause it for a while and see how much the stock has lost from the high levels. So this is the trend line, downtrend line we have estimated. This will be the downtrend line. And now let's see from the higher high to the lowest point. We have lost around 45% or more than that in just a small time period. So earlier we had gained more than 100% in very small period, and now we have the stock has lost so much in a very small period. So typically stocks will consolidate for most of the time, then they will show some sharp moves up, sharp moves down. But mostly they go around. Uh, I mean, the way the Camarilla pivots work. So R5 breakout will lead to R3, then R3 failure would lead to subsequent down years till maybe the S3 or S4 levels are hit, then there will be consolidation again, and then there will be a bounce back towards the R4 levels, which is how the stock or the stock price is getting bounded even across the years. Now there is a consolidation happening. Stock is trying to move up. Stock is consolidating right now above the pivot levels. So you see, we had a very bad fall, then there was a consolidation, then there is another year where the stock is just consolidating. So having such stocks for 2, 3 years, your net worth is generally going down only. You are not moving your equity curve up, or your wealth is not getting increased. The time is lost, the money is lost. So typically a method where you can get your equity curve to move up consistently would be much better than just allocating to all the stocks randomly. So if we had the method like allocate above, I mean, when the S3 breakdown failed and get out at R4 or R5 of that year, or when we might enter when R5 uh, had break out and we sit at the R3 levels of the next year. That way, the small portions of those trends would get captured in your equity curve and help you to grow your or compound your net worth consistently. So, such is the nature of the piecewise linear algos, which can get back tested. I mean, we can back test such algos and we can understand what kind of drawdowns they give or how much gains they might produce for that particular drawdown that you have to face. So now we can see that there was a S4 breakdown, and again there is a consolidation. So R4, earlier we saw that in that particular year earlier the R4 breakout had failed, and that's why we can see that once R4 fails, S4 is the most likely probable reality of that price action. So now the next year we have hit S3 levels and bounced back from that. There was a V-shaped recovery. And again, there is a consolidation and the stock is in no hurry to move up. So it is again going down, consolidating near the S3 levels. And just consolidating. It was a maybe a delicate bounce and then it is consolidating around the S3 levels. There's some interest to move the stock up, or someone really wants to get inside this stock right now, but due to the bounce, the price action, it is still consolidating around the S3 levels. So we have now entered the year 2020, which was a bad year start at the start because of the macro situation, the virus. And now we can see that the stock is taken out and S4 levels were breached, S5 levels were breached, and the stock took a support around 46 levels. So let's load this in our memory that took support at the 46 levels, and go back to our historical charts, and let us see the breakout candle that we talked about around the S3 levels. So you see that the S3 levels breakout candles high is still respected in the worst of the worst crisis. So this is some magic that happens that once the asset's intrinsic value gets accepted uh, by most of the market participants in the past, that particular value is still respected in the future as well, even in the case of worst crisis. There was a bounce back from there, and then, as you all know, that all the stocks moved up rapidly because they were not supposed to trade on those levels at those levels in 2020. And just by a slight uh, benefit of the macro situation, that the situation of the coronavirus is not the end of the world, the stocks started trading to the normal values, which way they were trading at the start of the year. So they immediately, the stock tried to go to the pivot levels, which is the accepted level of the stock for that particular year, as per the Camarilla pivot theory. And then the stock also tried to reach the R4 levels. So this was the general price action uh, data or analysis, the bar by bar replay. You can see that in just a small time, the gains are more than 50% or more. I mean, if you capture even a small portion of that, that gain is really, really huge in terms of a single year. So that was the overall price action that we saw. So these are the key observations from the price action. So we saw that the stock above R5 levels in the week might go to the R3 levels in the next year. So R5 crossover went to the R3 levels in the next year. So we saw that there were around 160% gains in just 322 days. Next, we have the another key observation that a failure from R4 or R3 breakout would lead to S3 or S4 or even S5 levels in the upcoming years or in the same years. So we saw that a failure in R3 led to a severe fall of around 45% in the stock price. And if we just had moved out of it at R3, uh, the drawdown would be avoided. So these are some key observations. At Quantway Consulting, we can help you to do the idea validation, custom strategy testing, backtest your ideas, help you develop the Python code by helping you to write the prompts required uh, for your AI tools like ChatGPT or uh, Gemini or Perplexity, and then we can help you in quantitative strategy development. That is, we can provide you some ideas around the strategy and provide how to find out the higher multiple for your strategy. That is, we have to do a multiple parameters range bound back testing, and then from that we can select a particular parameters that might give a higher multiple in the future as well. So if you have liked the video, subscribe to our channel, and share it with someone who might need it. Thank you.